April 9th. It is almost the weekend. Congratulations, you made it. Couple of quick announcements before we get into the daily financial news. And wow, today we've got some really big head scratchers and things for us to think about. First and foremost, need a big favor from you if you don't mind. We are 10 5-star reviews away from getting to 500 on Amazon. If you could do me a favor and help this book get to 500 5-star reviews on Amazon, I'd greatly appreciate it. It's a little thank you can give me. A couple of minutes of your time, I would greatly appreciate that. Second, Anna, Kelly, and I should be talking today at 11 Pacific. As you know, she's usually with us on Wednesdays, so you can look for 3 videos with the great Anna Kelly. And then lastly, I've been working pretty hard on a presentation that I will record right after this video and will be up this morning about the 10 traits that I see in investors who really go for it and do the work, and 10 investors who kind of sit there and act busy and say the right things and do nothing. I've been doing this for a couple of years, and I think it's just important to acknowledge some hard, true facts. So you can look forward to that video being up in a couple of hours. And I share it with you not to criticize, but just to maybe watch the 10 and go, am I in? I think we're back. I don't know, guys. If you're still out there, do me a favor. Give me a little, I don't know, text or chat. Tell me you're still there. I'm going to assume we are, given it says live and it's counting. If it bombs again, I'll start over. But in the end, look for that video later today. So on to the daily financial news. Oh, cool. Still there. Thanks, Miguel. So the biggest news of the day is inflation. Producer price index. And this is stuff, folks, we've got to watch going forward. And I've told you this was coming. I've told you this was coming. Producer prices were up 1% in March. The expectation was 0.5. The year on year, 4.2%. Let that sink in. 4.2%. That is the second highest reading ever. We had one blip above that in September of 2011. This is not over. These numbers are going to continue. This is why we have seen some upward pressure on the 10-year. This is why I think it is not over. I'm shocked the 10-year is not up more today. Again, it was a beat. I'm not sure what was worse, the 1% move in March or the 12-month move is 4.2. I got to tell you, I think it's the 4.2, and I think it's only gets worse from here. Again, Jerome Powell came out yesterday and said, we are in an uneven recovery. I don't know what he's talking about. At least as the consumer, you and I, everything is getting more expensive. I'm not sure what he's talking about. What's gotten cheaper recently? I mean, Jesus, everything. And it only gets worse from here because, as I've said, we are exiting the final foot or two of this dark tunnel into the light. And boy, the consumers are already chomping at the bit, which is only going to raise prices, probably raise wages, and then the inflation cycle moves further ahead. Next up, we've got, I saw that Box, cloud-based software company, ended up having to take $500 million from KKR, basically a cash infusion. I would expect their stock to have been getting a hit. It hasn't performed well based on other cloud-based technologies, but it's probably going to take a step back from that. GM and Ford, man, what is going on with chips? We have got to build more stuff in our country. I remember, God, I was in my 20s and there was this revolution called just-in-time manufacturing. And basically where you kind of just tightened up the supply chain so goods would not, wouldn't sit on the shelf or work in process. They'd just go right through to finished goods. Well, we have learned some painful lessons. GM and Ford have once again cut production further. They now estimate that they will reduce profits because of chips by 1.5 to $2 billion. That's with a B. That's kind of crazy. On the flip side, what does that mean for used vehicles and used trucks? Used trucks are going up. Again, why do I bring that up? Because vehicles, used cars specifically, are in inflation guides and counts. Inflation is going up. I was encouraged to see that Florida is stepping up and finally suing the CDC. Florida is obviously suing the CDC in this example around some kind of cruise mandates. I wish Texas or Florida or some other states would sue the CDC around their eviction moratorium because, again, it's against the U.S. Constitution. I don't remember reading anywhere in my studies that the CDC has the power that they have taken. So I don't get it. Why don't more states sue on the behalf of their citizens? So we'll see where that goes. I'm calling out Texas specifically. We like to hear about things in Texas. So Texas, why don't you join Florida and sue the CDC for their overreach? Again, just further signs that we are entering the light. Carnival has already indicated they have seen record surge of bookings. They've gotten 2 upgrades. We are seeing the Great Rotation accelerate, which is the stocks, Great Rotation in stocks. Las Vegas is opening up and bookings are rising in hotels and casinos. They are now actually talking about conventions in the summer. Shocking. People want to go to conventions. Oh my God, people want to go to Vegas. Is anybody surprised by this? It's amazing Vegas may come through this crisis unscathed. Would not have guessed that a year ago. It is pretty crazy. Southwest Airlines, again, proof that we are exiting dark, entering light. They are recalling all 100% of all their flight attendants that they unfortunately had to put on leave. Travel is going to come back as a monster. Tickets are going to get more expensive. Flights. It is going to be amazing. And Southwest probably will benefit the most because it's kind of inter-US, right? Europe travel still kind of icky. Asia kind of icky. South America. So again, a lot of travel in the near future will be relatively local, short hops. Southwest should be crushing it. Levi Strauss, Levi Company, actually beat top and bottom and raised guidance for the year. Again, the consumer is back. They got their stimulus. Jobs are coming back, folks. People are going to retail shop. It is going to be amazing. Kudos to Levi. They're like, hey, look at all this retail space that's kind of empty. Some of those spots are nice. So Levi is going to be growing its footprint, taking over some locations. They're going to open up at least 40 kind of dedicated stores, and then potentially 400 kind of outlet-based stores. Again, Levi's is looking at the opportunity and seeing the sunshine, not the darkness. Oh, here's a big one for you. Have I not told you that commercial real estate is in trouble? Fixed rate, they don't have fixed rate debt. They have variability, lower rents, all this stuff. I've been warning you. Guess how much Manhattan office space fell in value in 1 year? I keep telling you guys this stuff is risky. You guys going into apartment syndications and LPs with cap rates of 4 and 5%. Oh, that is not going to end well. Office towers in Manhattan fell what did they fall? 25%. $1 billion fall in tax collections for the value, right? Property taxes. In 1 year. Let's do the math very simply. If you have a building that's worth $100 million and you go get a 70% loan, it means you raised equity from limited partners, potentially of $30 million, and Fannie or Freddie or some freaking insurance company gave you $70 million. You fast forward 12 months. Maybe you have a 1-year reset. Maybe it's 3, whatever it is. And now you have higher vacancies, lower rents, more expenses. And oh, by the way, the value fell 25%. So now the value is 75 and it's refi time. And they go, you know what? We will give you 70% of the new appraised value of 75 million. You're in trouble. You have 5 million of equity. No, wait, I did the math wrong. No, you now have $75 million value. You have a $70 million first. So yeah, you have 5 million in equity, but now your refi is $49 million roughly. So you need to go raise equity, new equity of $21 million. Have fun with that. Folks, single family homes have a huge benefit in this interest rate risk environment, and that is 30-year fixed rate debt at artificially low levels. These commercial folks, these deals that come across my email scare me. These assumptions of, oh, we're going to get 3 or 5% rent increase, and we're going to run at occupancies of 95 or 97%, and we're not going to have any turnover. Are you freaking kidding me? There are going to be so many loans called, weak hands. It is going to be a bloodbath. It's a couple years away because the financing needs to take time to come to term. But folks, commercial property can fall quickly. Manhattan, the center of the world, said by some, had office buildings fall 25% 1 year. That, folks, is a crash. I'm telling you, I've told you for a long time, the crash is not single family. It's commercial. I wish more people would pay attention. Oh, what else do we got? I guess I got a couple more things. Zillow says 1 in 10 people moved in the last 12 months. That feels about right, given my circle. 80% of the people that moved were for positive reasons, closer to family, closer to jobs, whatever. And it looks like, again, I keep telling you, my students know this, we preach, look every day. Inventory is already rising in a couple of urban areas. The 4 markets, it's already rising right now. LA, San Francisco, New York, and Chicago. Folks, I'm telling you, and I did a video on this yesterday. It's going to come. Be patient. Do your homework. Get ready. Do the math. Do the work. So that's what I got for you today. I'm going to go work on this video. Talk to Anna later today. Have a wonderful Friday. It's almost the weekend. Take care of yourself. Bye-bye.